Markets, of course, are going to be keenly eyeing what's going to come out of the Fed meet this week. Remember, expectations are high that we are going to see a 25 basis point rate cut. That's actually been more or less factored into the price. Any sort of any move outside of that could possibly lead to some disappointment. Now, rates could move between a 1.75 to 2% range. That's the kind of room that they have to maneuver currently. So watch out for any dot plot update. We're going to be waiting to see anything that comes out of that. Also see if officials move anywhere from that neutral stance. Remember, commentary has become incredibly critical. We've got a whole host of data that's been coming out that's leading to now some niggling doubts about whether or not there's enough reason to cut those rates. We also saw a July cut as a mid-cycle adjustment. Remember, we've seen dissenting Fed members as well, and Powell may actually go ahead and squash any of those recession fears that have been brewing. So there is still a question mark as to whether or not we're going to see that rate cut come through, but 25 basis point, that's what we're anticipating. Also keenly watching out for any comments on the trade war impact on US GDP. That's going to be critical as an indicator, of course, on growth and recession going forward as well. So in the backdrop of the tariff wars that are currently at least seem to be de-escalating for the moment, we are, of course, continuing to track commentary on growth coming in there. Now, remember, globally, just to put this in context, central banks are slashing rates. And we have been seeing dovish commentary coming in all around. Draghi also, of course, announcing QE just last week. Trump has been very, very aggressive in demanding zero rates as well. But eyes on developments in Saudi Arabia, on bond yields, a movement there, and a lot of critical moving parts currently, which is why this FOMC meet is going to be critical.